We kick off with a look at the Nigerian equities market with Wole Layeni, a sales trader at ARM Securities. Later on, we'll review the fixed income and currency markets with Bankole Odusonya, team lead liquidity management at UBA. And finally, we shift our focus to the oil and gas sector, where Akem Oshinubi, director at Riverbank Capital, joins me in the studio to review the latest news in that space. That's what you can look forward to on this segment. You can also stay in touch with us by sending us an email to closingbell@abn360.com. You can also send us your tweets. Our handle is @theclosingbell. But first, let's take a look at some top stories out of the region. The Lagos State Waste Management Authority has announced plans to build a power plant that will generate 25,000 megawatts of power that will be fueled by rubbish. Yes, that's according to Ola Oresonya, the managing director of Lamata, who said that the project should be completed in 5 years. However, the power generated will only be 1% of the 2,000 to 3,000 megawatts that is estimated is needed in Lagos right now. But it is a start. Lagos is one of the world's largest megacities and generates waste in abundance. And the Nigerian interbank lending rates eased for the second consecutive week to an average of 11.8% compared to 12% last week on refunds from overpaid cash reserves and repayments of matured open market operation debts. Traders said some banks were refunded excess cash debited from cash reserves for the last month, while about 140 billion naira repaid in matured OMO bills boosted liquidity and helped to ease lending rates. Let's now move on to the markets. The NSE ASI index closed slightly higher today at 36,991 points. Gainers today were seen across sectors. The composite index was lifted by Mobil Oil, UAC, Zenith Bank, and Ashaka Cement. Heavy trades were also seen in ETI, Transcorp, GT Bank, and Zenith Bank. Joining me in the studio to wrap up the week's trading activity is Wole Layeni, a sales trader at ARM Securities. Wole, it's great to have you on the show this Friday. So your take on the recent trend we've seen in the market these days. We've seen the market kind of seesaw particularly over the last 3 to 4 sessions. So we're seeing it stuck in a range. The big question is, where does it go from here? We know next week is a shortened trading week, but what's your assessment of things right now?
Well, thank you for having me on. Yes. Over the last this week, we've seen the market just coast along, and that's going to possibly continue till next week and also for the next 2 weeks in our view, in-house. Basically, there are a few headwinds that investors are looking at and they're looking on. Hopefully, some of them are rectified, but then also here in the local market, we also have the earnings seasons that will start kicking off, and hopefully the banks will go first, and we'll start seeing that the major banks start releasing within the next few weeks. Basically, so you're not really going to see a bullish local market here because of what's going on, obviously, in the U.S.
Right.
But once that can be done, and there are already talks of a stopgap measure, hopefully that goes. And if that does happen, that they do create a part-time spending bill for the next 6 weeks, and then we can see investors wait to get more clarity on that.
Right.
So overall, I do believe that you're going to start seeing some sort of positioning by investors, if not already, as they've already started taking positions in names that they're comfortable with while we wait for earnings season to kick off.
Yeah, they're very comfortable with the consumer names. And your take on the interest we're seeing in that space right now? A lot of people have, I think everyone agrees they are overvalued right now, but we continue to see interest. They're holding up pretty well, even in this quarter when a lot of people thought that perhaps we'll see some profit taking. The sentiment around the bank is still negative right now, so they still seem to be some sort of a safe haven right now.
Yes, that's true in some names, and you're going to see that continue because obviously in the local market here, we like multinationals because they have that value brand. They have that, they get a sort of, they're priced to a premium compared to local run companies. But what we've also seen is that you're going to see some interest in the names like Flour Mills, USCN, that have fallen off a bit. And then you're going to also see investors look at the long-term potential of these companies, and then they're going to come in to buy them up. So you're going to see some buying opportunities. And also when you do see some of the consumer names like PZ, Unilever, even though they are overvalued, the long-term potential, actually you would see, you'll see investors come in to mop them up just to, even just they're just overweighting their portfolio by a bit. You're going to see that happen in the market.
Yeah, but speaking of safe havens, do you think the cement sector may be the new safe haven? Because these valuations are really stretched, and I can only imagine that if they continue to go up, some people may begin to get a little jittery. So perhaps cement may be the next sector that investors may be looking at here.
Well, obviously, we do like the cement sector in-house, and the cement sector is one, if you look at the long-term growth of the country, it goes in line with the cement sector. And I'm sure we all know about the large cross that we saw that happened earlier this week.
Yeah, Dangote Cement.
In Dangote Cement, yes. We're seeing that, from just what's going on is that a few local investors are actually taking a position. So, yeah, you would see, even at this valuation, Dangote Cement is one that you want to be in. Even if you're just market weighted with Dangote Cement, you're going to want to be there because you don't want to get left out of the boat.
Right. Well, so your thoughts about what the Q3 bank earnings seasons would give to this market in terms of setting the tone for the rest of the quarter? I think a lot of people are a bit pessimistic about what we're going to see from the banks, but your take on what we're likely to see?
Well, that's a good one. For instance, our view is that you're not going to see what happened last year with the fantastic results, especially going into Q3. Investors are a bit skittish about all the measures that the CBN has taken, but also they're also looking to Q3 to say as a gauge for how that would affect. Now, our view is that the top tier banks obviously benefited. If you've looked at how GT Bank, Zenith Bank has traded within the last few days, they've gone to some new highs that they haven't been to in a few months. So some investors are still positioning there, and we think that obviously the tier 1 banks are going to be stronger placed than the tier 2 banks, and that their results will definitely be better than the tier 2 banks. But going forward, there are also some tier 1 names that have fallen off and that you have to take advantage of, even though, and for instance, Diamond Bank was a recent pick of ours when it fell to 6.15, 6.1 levels. We thought that was good because they have a very good strategy, cheaper cost of funds. So you're also going to see a bit of selective picking between those two. But the tier 1 banks come first, and we believe their results will definitely be better. And once that happens, you're going to see that support the markets. So hopefully, if their results come, which we're all expecting, the tier 1 banks should be better placed.
Right. When you engage investors, what's your take on the liquidity of this market right now? We've seen that pick up over the last week or two. We've seen a lot more trading, even though one can argue that some of that was as a result of some specific names. I mean, today, for instance, we saw ATI, we saw a lot of transactions there. But in terms of liquidity, particularly for those multinational names, one gets the sense that they're not out there anymore. A lot of people that buy those stocks now tend to hold on to them, and new investors really need to just pay that premium to get them now.
Yes, that's expected with what's going on globally. So we have seen a lot of risk-off trades. So you're not going to see investors as bullish, and we haven't seen that really as investors being as bullish and just willing to buy a stock because they're trying to fill up their portfolios. So that obviously comes with the territory. You're right that liquidity has dried up in some names. So if you do want some stocks, you're going to have to pay a premium for it. That we expect that, except for some selective deals that will happen, you're going to see this kind of volumes keep coasting along for at least another week or two. And the whole market is looking for clarity next week. And once that has been done, then you could see a bit of risk on trades. And that also helps the Nigerian market because by next week, once we come back from the break on Thursday, hopefully the debt ceiling debate has been settled. Once that has, and we start having results being released on the exchange, you can just see a slight more momentum going on in the market as results come out.
Right. So what happens in the US will be key next week. I think a lot of people expect one way or the other it will be settled. At least, like you mentioned earlier, there are some signs that we are moving in that direction. Thank you so much for joining us.